Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, albeit with fluctuations. The forecast price suggests continued growth over the next week, further supporting a bullish outlook. The support price of $95,637.71 acts as a solid foundation for potential price increases. Therefore, the investment strategy recommends entering a long position at the current market price, with a stop loss set at $95,637.71 to minimize potential losses. The target price should be set at $102,235.61, which represents the resistance level and offers a significant profit margin. This strategy capitalizes on the long-term upward momentum of Bitcoin, aiming to capture substantial gains as the price approaches its resistance level. The provided data for Bitcoin Cash suggests a potential short-term bearish trend. While the historical prices show some fluctuations, the forecast indicates a downward trajectory, with prices potentially dropping from the current level towards the support price. This bearish outlook, coupled with the forecast, makes a short position the most suitable strategy for a short-term investment. Considering the potential for a price decline, an aggressive short-term investment strategy could involve entering a short position at the current price of around $450. Setting a stop loss at $465 would protect against unexpected price surges, while a target price of $430 could allow for profit-taking before the price potentially reaches the support level. This strategy aims to capitalize on the anticipated short-term decline in Bitcoin Cash's price. Based on the provided information about stacks, a cautious investment strategy with a medium-term perspective seems appropriate. The historical price data shows a volatile trend with fluctuations above and below the current price. The forecast suggests a slight downward movement in the coming week, which aligns with the recent price decline. However, the support price at $1.485 indicates a potential floor for the price. Therefore, a long position could be considered with a strategic entry point around $1.55. This entry price allows for some room for price adjustment based on the forecast while staying above the support level. A stop-loss order could be placed at $1.49 to limit potential losses if the price drops significantly. The target price could be set at $1.70, aiming to capitalize on a potential rebound towards the resistance level. This strategy allows for a medium-term hold, potentially benefiting from a price recovery while mitigating risk through a well-defined stop-loss. Based on the provided Ethereum price data, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price chart reveals a period of consolidation and a recent upward push, suggesting potential for further growth. However, the recent peak at $3,680, followed by a sharp decline to $3,380, indicates some volatility and risk. The forecast price suggests a sideways movement with a slight upward bias, hovering around the $3,400 to $3,500 range in the coming week. Considering these factors, a long position is recommended with a medium-term investment horizon. A suitable entry price could be around $3,420, slightly below the recent high and above the support level. The stop loss should be placed at $3,350, protecting against a significant downside move. The target price could be set at $3,600, aiming to capture potential upside momentum. This strategy balances the risk of a short-term correction with the potential for medium-term gains as Ethereum potentially stabilizes and resumes its upward trend. Based on the provided price information for Ripple, a short-term investment strategy appears most suitable. The 2-week price change shows a slight upward trend, but the forecast predicts a decline in the coming week. This suggests a potential for a short-term price correction. Considering the support price at $2.1606 and the resistance price at $2.4596, a short position could be profitable if the price retraces towards the support level. Therefore, an investment strategy would involve entering a short position at the current market price, which is around $2.42. A stop-loss order should be placed at $2.46 to limit potential losses if the price unexpectedly surges. The target price for this short position would be set at $2.20, aiming to capture a potential price decline towards the support level. This strategy capitalizes on the anticipated short-term price correction while managing risk through a well-defined stop-loss order. Based on the provided information for Binance Coin, a medium-term investment strategy appears to be the most suitable. The historical price data demonstrates a general upward trend, but with some fluctuations. The forecast suggests continued growth, with prices potentially reaching around $717 in the coming week. The support price of $656.1 provides a safety net, indicating a strong base for the asset. Therefore, a long position is recommended for this medium-term strategy. An entry price around $705 would allow you to capitalize on the current price level while still having room for potential growth. The stop loss should be set at $690 to mitigate risk in case of a sudden price drop. The target price could be set at $725, aiming to capture a significant portion of the potential upside based on the forecast and historical price movements. Given the price trends and forecast for Stellar, a medium-term investment strategy appears to be the most suitable. The historical price data shows a recent upward trend, but the forecast suggests a slight pullback in the coming weeks. This indicates a potential consolidation phase before the price potentially resumes its upward movement. Therefore, a long position is advisable, aiming to capitalize on the anticipated price recovery. An ideal entry price for this strategy would be around $0.395, slightly below the current price and above the support level of $0.3555. This provides a margin of safety while still allowing for potential upside. A stop loss should be placed at $0.3555 to limit potential losses if the price drops below the support level. The target price could be set at 45 cents, aiming to capture a significant portion of the potential upward movement. This strategy allows for a balance between risk and reward, capitalizing on the bullish outlook for Stellar while mitigating potential downside risk. The current price trend for Toncoin suggests a potential for short-term decline. While the historical price shows some fluctuation, the forecast price indicates a consistent downward trajectory over the next week. Considering this bearish outlook, an investment strategy focused on a short position appears more suitable. Entering a short position at the current price of around $5.65, with a stop loss set at $5.75 to mitigate potential losses, and a target price of $5.30, would allow for capitalizing on the anticipated price decline. This strategy aligns with the short-term perspective and aims to profit from the downward movement in the price of Toncoin as predicted by the forecast. Based on the provided price information for Cardano, a short-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a volatile yet generally upward trend, with the current price hovering near the support level of $0.9616. The forecast suggests a slight increase in price over the next week, reaching around $0.993. However, considering the recent price fluctuations and the proximity to the support level, there is a higher probability of a pullback before the price significantly surpasses the resistance level of $1.0951. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $0.926. A stop-loss order should be placed at $0.9616, the support level, to limit potential losses. The target price would be set at $0.900, anticipating a moderate pullback towards the support level. This strategy aims to capitalize on the potential short-term price correction while mitigating risk through a well-defined stop-loss order. Remember that this is a high-risk, high-reward strategy and should be approached with caution. Given the price history and forecast for Litecoin, a medium-term investment strategy appears most suitable. The price has shown some volatility over the past 2 weeks, with a slight upward trend. However, the forecast suggests a slight pullback in the coming week, followed by a potential recovery. This indicates a period of consolidation rather than a strong directional move. Therefore, a long position is recommended for a medium-term investment. An entry price of $103, slightly above the current price and the recent support level, allows for some room for price correction before entering a potential uptrend. A stop loss at $99.37, the identified support price, protects against significant downside risk. The target price should be set at $115, aligning with the resistance level and the potential for price appreciation in the medium term. Based on the provided Doge-Coin price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with an overall upward trajectory. The recent price has been consolidating around $4.81, suggesting a potential breakout in either direction. The forecast predicts a slight increase in price over the next week, reaching around $4.84. This positive outlook, combined with the support price at $4.7175, indicates a higher probability of a continued upward movement. Therefore, a long position is recommended for this strategy. An entry price of $4.75, slightly below the current price, allows for a margin of safety while capturing potential upside. The stop loss should be set at $4.65, safeguarding against a sudden price reversal. The target price can be set at $5.15, aiming to capitalize on the predicted price increase and reach the resistance level. This medium-term approach allows for a balance between risk and potential reward, taking advantage of the anticipated upward momentum while mitigating potential downside. Given the price trends and forecast for Aptos, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, but recent fluctuations suggest some volatility. The forecast indicates a slight upward movement over the next week, with prices potentially reaching around $9.38. However, the resistance level at $10.86 suggests that significant upward momentum might be limited in the short term. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase towards the forecast price. A suitable entry price would be $9.20, allowing for a margin of safety below the current price and the forecast's lowest point. The stop loss should be set at $8.73, the support price, to minimize potential losses if the price drops unexpectedly. The target price could be set at $9.60, a conservative target that allows for a reasonable profit margin while still leaving room for further price appreciation. This strategy balances risk and reward, taking advantage of the potential for growth while mitigating potential losses. Based on the provided price history and forecast for SE, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend with recent dips, while the forecast suggests a continued downward trajectory. This indicates a potential for further price decline in the short term. However, the historical price has bounced back from similar dips in the past, suggesting a possibility of a rebound in the medium term. Therefore, a long position with a medium-term outlook is recommended. An entry price around $0.400 could provide a good entry point, aligning with the current price trend and offering a potential for upside if the price rebounds. The stop loss should be set at $0.3989, the support price, to minimize potential losses. The target price could be set at $0.431, the highest recent price, aiming to capitalize on a potential price recovery. This strategy allows for potential profit from a price rebound while mitigating risk by setting a stop loss at a crucial support level. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $25.04. The forecast suggests Ethereum Classic could drop further, reaching as low as $24 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $26, aligning with the recent price action and the upper boundary of the expected price range. The stop loss should be set at $27 to protect against any unexpected price recovery. The target price should be set at $24, allowing you to take profits before the market reaches major support at $25.04. This strategy aims to capitalize on the potential for a short-term decline in Ethereum Classic prices while managing risk through a well-defined stop-loss order. Based on the provided information for Polygon, a cautious investment strategy focusing on the short term appears most suitable. The historical price data demonstrates a recent downward trend, with the forecast indicating further declines in the coming week. The support price sits at $0.4518, suggesting a potential floor for the price, while the resistance level is at $0.5237, indicating a significant barrier to upward movement. Given these factors, a short position on Polygon appears to be a more promising opportunity. To execute this strategy, an entry price of $0.485 could be considered, aligning with the current price and recent price action. A stop loss should be set at $0.495 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.455, aiming to capitalize on the anticipated price decline towards the support level. This approach allows for a controlled risk profile while seeking to profit from the prevailing bearish sentiment surrounding Polygon. Based on the provided information for AEVO, a cautious investment strategy leaning towards the long term appears most suitable. The historical price data shows fluctuations, but there's a general upward trend, suggesting potential for growth. However, the forecast price indicates a slight downward correction in the near term. This suggests that waiting for a pullback before entering a long position could be a prudent approach. An ideal entry point would be around $0.360, slightly below the current price and the recent support level. Setting a stop loss at $0.349, the lowest forecast price, would limit potential losses. The target price could be set at $0.409, the recent resistance level, aiming to capitalize on the potential for a rebound and continued upward movement. This strategy allows for a balanced approach, taking advantage of a potential dip while aiming for a reasonable profit target in the medium term. Based on the provided optimism price history and forecast, a short-term investment strategy appears to be the most suitable approach. The recent price fluctuations indicate a volatile market, with both upward and downward trends. While the forecast suggests a slight upward movement in the coming week, the historical data shows a recent decline, suggesting potential for a pullback. Therefore, adopting a short position allows us to capitalize on this anticipated dip. An ideal entry price for this short position would be $1.92, aligning with the current price and the forecast. To mitigate risk, the stop loss should be set at $1.96, slightly above the forecast high, to protect against unexpected upward movements. The target price for this short position would be $1.85, the lowest point predicted in the forecast, allowing for potential profits before the price potentially rebounds. This strategy allows for a quick turnaround, aiming to capitalize on the short-term volatility of optimism. STRK shows a fluctuating price history with recent upward movement. However, the forecast suggests a slight downward trend in the coming week. The support price at $0.4132 provides a safety net, while the resistance at $0.5073 indicates potential for further upside if the price breaks through. Considering these factors, a cautious approach is recommended. Therefore, a short-term investment strategy with a focus on the short side appears to be more suitable. An entry price around $0.490, slightly above the current price, allows for a small buffer against immediate fluctuations. The stop loss should be set at $0.500 to minimize potential losses if the price unexpectedly surges. The target price can be set at $0.460, aligning with the forecasted downward movement and providing a reasonable profit margin. This strategy aims to capitalize on the anticipated price correction while mitigating risk through a well-defined stop loss. Based on the provided Solana price data, including the 2-week price change and the 1-week price forecast, a medium-term investment strategy appears promising. The historical price data reveals a general upward trend, punctuated by periods of consolidation. The forecast suggests continued growth, albeit at a slightly slower pace. This indicates that Solana might be entering a phase of sideways movement before potentially breaking out to new highs. Considering this, a long position is recommended for a medium-term investment horizon. The entry price should be set at $202, aligning with the current price and offering a potential entry point before a potential price surge. A stop-loss order at $195.42, the support price, will safeguard against unexpected price drops. The target price should be set at $218, a level above the recent highs and reflecting the potential for upside movement based on the forecast. This strategy allows for capital appreciation while mitigating risk through a well-defined stop-loss. Based on the provided information for Jupiter, a short-term bearish investment strategy appears to be the most suitable. The 2-week price history demonstrates a downward trend, and the 1-week forecast projects further declines. The current price is hovering near the resistance level, suggesting a potential for a pullback. This bearish outlook, coupled with the forecast, indicates a higher probability of the price falling towards the support level. Therefore, a short position is recommended for Jupiter. An entry price of $0.900 would allow for capturing the potential downward momentum. The stop-loss should be placed at $0.960 to protect against an unexpected price surge. The target price should be set at $0.799, aligning with the support level, maximizing potential profits while minimizing risk. Given the price trends and forecast for render, an investment strategy focusing on a short-term approach seems prudent. The historical prices show a general upward trajectory, with the current price hovering near the support level of $8.032. The forecast indicates a potential rise towards $8.31, suggesting a bullish outlook in the short term. Therefore, a long position is recommended to capitalize on this anticipated price increase. An ideal entry price would be around $8.05, slightly above the support level, to minimize the risk of immediate price drops. A stop-loss order should be placed at $7.95 to protect against unexpected downturns. The target price can be set at $8.25, aiming to capture a significant portion of the forecasted price increase while allowing room for potential market fluctuations. Given the price trends and forecast for Solana name service, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, and the forecast indicates further declines. Although the current price is close to the support level of $0.218, the resistance at $0.2646 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An aggressive short-term investment strategy could involve entering a short position at 26 cents, with a stop-loss order at $0.265 to limit potential losses. The target price could be set at 24 cents, aiming to capture a portion of the projected price decline. This strategy leverages the short-term bearish outlook indicated by both historical data and the forecast, aiming for a quick profit before the price potentially bounces back or finds support at $0.218. The provided historical and forecast price data for Doge-Coin suggests a cautiously optimistic outlook for the short to medium term. While the recent price movements have been relatively stable, hovering around the 33 cents mark, the forecast indicates a gradual upward trend. This suggests a potential for capital appreciation in the coming weeks. Therefore, a long position on Doge-Coin appears to be the most suitable strategy. Considering the support price at $0.31201 and the resistance at $0.39414, a strategic entry point could be around $0.325, allowing for a potential upside towards the resistance level. A stop-loss order placed below the support price at $0.31201 would help mitigate risk in case of an unexpected price decline. The target price could be set at 38 cents, aiming to capture a significant portion of the anticipated upward movement. This strategy aligns with a short to medium-term investment horizon, capitalizing on the projected price appreciation while managing risk effectively. PEPE shows a recent price increase, but the forecast suggests a slight downward trend over the next week. The current price is near the resistance level, indicating potential for a pullback. Considering this, a short-term short position strategy seems suitable. An entry price around $0.0000200 would allow you to capitalize on the potential price decline. A stop loss should be set slightly above the entry price at $0.0000205 to minimize risk. The target price could be set at $0.0000185, aligning with the historical price lows and the support level. This strategy aims to profit from a short-term correction in PEPE's price before it potentially rebounds. Given the current price trend and forecast for SHIB, a short-term investment strategy appears most suitable. The historical price data demonstrates a slight upward movement, but the forecast suggests a potential pullback in the coming week. This indicates a short-term bearish outlook, making a short position a potentially profitable opportunity. An aggressive short-term strategy could involve entering a short position at the current market price of approximately $0.0000220. The stop-loss order should be placed at $0.0000221, slightly above the resistance price, to limit potential losses. The target price should be set at $0.0000211, aligning with the support price, aiming to capture a potential price decline. This strategy capitalizes on the predicted short-term downward movement while managing risk through a well-defined stop-loss order. Doge-Coin's recent price history exhibits a fluctuating pattern, with both upward and downward movements. The price forecast suggests a decline over the next week, pointing towards a bearish trend. Considering this information, a short-term investment strategy focusing on a short position appears to be the most suitable approach. An entry price of $1.86, aligning with the current price, would be appropriate for this strategy. A stop-loss order should be placed at $1.92, slightly above the entry price, to limit potential losses in case the price unexpectedly rises. The target price should be set at $1.69, reflecting the lowest projected price in the forecast, allowing for profit-taking before the potential price drop. This strategy capitalizes on the anticipated decline in Doge-Coin's price while managing risk through a well-defined stop-loss order. Based on the provided price history and forecast for Doge-Coin, a short-term bearish strategy appears most suitable. The 2-week price history demonstrates a downward trend, with the recent forecast suggesting further declines. The price is currently hovering near the resistance level of $0.006215, indicating potential for a pullback. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current price of $0.00608. The stop-loss should be set at $0.006215 to limit potential losses if the price unexpectedly rises above resistance. The target price would be $0.005673, the support level, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the bearish sentiment indicated by both the historical price data and the short-term forecast. Near Protocol shows a fluctuating price trend over the past 2 weeks, with both upward and downward movements. The forecast price suggests a slight decrease in the coming week. While the current price is near the support price, the resistance price is significantly higher, indicating potential for future growth. Considering these factors, a medium-term investment strategy with a long position seems suitable for Near Protocol. An ideal entry price would be around $5.35, aligning with the support price and offering a potential entry point for a price increase. The stop-loss should be set slightly below the entry price at $5.30, protecting against immediate downside risk. The target price could be set at $6, aiming for a moderate profit based on the historical price fluctuations and the potential for Near Protocol to reach the resistance price in the medium term. This strategy allows for capital appreciation while managing risk through a well-defined stop-loss. Given the price trends and forecast for Internet Computer, a conservative investment strategy would focus on a short-term approach to capitalize on the expected price stability. The historical prices show a slight upward trend, with the current price hovering near the support level of $9.877. The forecast suggests a slight decrease in the coming week, indicating a potential pullback. This scenario suggests a short position could be advantageous to capitalize on the anticipated decline. An aggressive short-term investment strategy would involve entering a short position at $10, aligning with the current price. The stop loss should be set at $10.10 to protect against unexpected price increases. The target price should be $9.80, slightly above the support level, allowing you to take profits before the market potentially rebounds. This strategy aims to capitalize on the anticipated price dip while managing risk effectively. Based on the provided injective price data, a short-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight upward bias. However, the forecast suggests a period of consolidation around $23, with limited potential for significant price movement in either direction. This indicates a relatively low-risk environment for a short-term investment. Considering this, a long position is recommended. An entry price of $22.50 allows for a purchase at a slightly discounted price relative to the forecast. The stop loss should be set at $21.50 to protect against a sudden price drop. The target price can be set at $24.50, aiming to capitalize on a potential upward movement towards the resistance level. This strategy allows for potential profit while managing risk within a short time frame. Given the provided BTC price history, forecast, and support/resistance levels, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with both upward and downward movements. While the forecast suggests a slight dip in the coming weeks, it also indicates a potential rebound towards the end of the period. The current price is relatively close to the support level, suggesting a potential buying opportunity. Therefore, a long position in BTC is recommended for a medium-term investment horizon. The entry price should be around $475, allowing for a buffer below the current price and below the recent low. The stop loss can be placed at $445, safeguarding against a significant drop below the support level. The target price should be set around $540, aligning with the resistance level and the potential for a price surge based on the forecast. This strategy aims to capitalize on the potential rebound in BTC while managing risk through a well-defined stop loss. Based on the provided price history and forecast for THETA network, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data shows an upward trend, albeit with some volatility. The current price is situated near the support level of $2.176, suggesting a potential for further upward movement. The forecast prices also indicate a general upward trajectory over the next week, with the potential for THETA network to reach around $2.45. Therefore, an aggressive investment strategy could involve entering a long position at the current market price, around $2.32. The stop loss should be set at $2.18, slightly below the support level, to protect against any unexpected price drops. The target price could be set at $2.55, aiming to capture a significant portion of the potential upward movement predicted by the forecast. This strategy capitalizes on the positive price momentum and the potential for further gains in the short term. Based on the provided information for WorldCoin, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with an overall upward bias. While the forecast suggests a slight increase in the coming week, the price is currently hovering near the support level of $2.299. This indicates a potential consolidation period before further upward movement. Therefore, a long position is recommended. An entry price of $2.299 aligns with the support level, providing a solid foundation for the investment. A stop-loss order should be placed at $2.25 to minimize potential losses in case of a sudden price drop. The target price can be set at $2.55, aiming for a gain of approximately 11% based on the recent price action and the forecast. This strategy allows for a balanced approach, capitalizing on the potential for growth while mitigating risk through a well-defined stop-loss order. Hooked Protocol's recent price history shows a fluctuating pattern with a slight upward bias. The forecast suggests a downward trend in the coming week. Considering these factors, a short-term bearish strategy appears more suitable. A good entry point would be around $0.432, which is slightly above the recent low and aligns with the predicted price decline. To manage risk, a stop loss should be placed at $0.442, above the current price and the resistance level, to limit potential losses. The target price could be set at $0.406, aligning with the lowest point predicted in the forecast, allowing for a reasonable profit margin. This short-term strategy capitalizes on the anticipated downward movement while minimizing risk through a well-defined stop loss. Remember, this is just a suggestion based on the provided information, and market conditions can change rapidly. Always conduct thorough research and consider your own risk tolerance before making any investment decisions. Artificial Superintelligence Alliance's recent price history shows a volatile but generally upward trend. The forecast suggests continued growth, with prices expected to reach around $1.42 in the coming week. The support price of $1.362 provides a safety net, while the resistance price of $1.612 indicates the potential for further upside. Given this outlook, a long-term investment strategy appears promising. To execute this strategy, I recommend entering a long position at the current market price, which is slightly below the forecast. A stop loss could be placed at $1.362, aligning with the support price, to minimize potential losses. The target price should be set at $1.612, aiming to capture the full potential upside before encountering resistance. This strategy capitalizes on the positive price momentum and allows for substantial gains over the long term. Given the historical price data and the one-week forecast for Polkadot, a medium-term investment strategy appears to be the most suitable. While the two-week price change shows some volatility, the forecast suggests a slight downward trend in the near future. This indicates a potential opportunity to enter a short position, aiming to capitalize on the anticipated price decline. An entry price of $7.10 would allow you to buy in at a point slightly above the current price, but below the predicted peak. The stop loss should be set at $7.25 to protect against unexpected upward price movement. The target price could be set at $6.80, aligning with the lower end of the forecast range and allowing for a potential profit before the price potentially rebounds. This strategy balances risk and reward, aiming to capture a moderate profit within a medium-term timeframe. Based on the provided Filecoin price information, a short-term investment strategy appears to be the most prudent approach. The recent price history demonstrates a period of consolidation, with the price fluctuating between $4.92 and $5.67 over the past 2 weeks. The forecast price for the coming week suggests a slight upward trend, peaking around $5.64. However, the historical price data also indicates resistance at $6.733, suggesting that a significant upward breakout is unlikely in the short term. Considering these factors, a long position with a conservative target price of $5.70 seems reasonable. The entry price should be set at $5.35, allowing for a buffer below the current market price. The stop loss should be placed at $5.20 to minimize potential losses if the price unexpectedly drops. This strategy aims to capitalize on the anticipated upward momentum while mitigating risk by establishing a clear stop loss level. Given the price trends and forecast for Conflux, a moderate investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, with recent fluctuations around the 16 cents mark. The forecast suggests a potential for consolidation around this level in the coming week. The support price of $0.1398 indicates a strong base, while the resistance at $0.1673 suggests that significant upward movement might be limited in the short term. Therefore, a long position in Conflux is recommended for a medium-term investment horizon. An entry price of $0.162 would allow you to buy in at a relatively attractive level, taking advantage of the potential for consolidation and a gradual upward movement. A stop loss at $0.158 would protect against significant downside risk, while a target price of $0.172 would capitalize on the potential for a moderate price increase towards the resistance level. This strategy allows for potential profit while managing risk within a reasonable timeframe. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the forecast indicates a period of consolidation around the $36 price level. This suggests that Ethereum name service may not experience significant price movements in the near term. The support price of $19.42 provides a strong base for potential buying opportunities, while the resistance price of $37.86 acts as a ceiling for upward momentum. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $34 could be considered, as it is slightly below the current price and aligns with the consolidation phase indicated by the forecast. The stop loss should be set at $32 to protect against potential downward price movements. The target price could be set at $37, aiming to capture potential upside momentum if Ethereum name service breaks through the resistance level. This strategy allows for potential profits while managing risk through a well-defined stop loss. Given the 2-week price change and 1-week forecast for Avalanche, a cautious medium-term investment strategy appears most suitable. While the historical price data shows some volatility, the recent trend suggests a slight upward movement. The forecast indicates a consolidation phase around the current price levels, with a slight potential for growth. Considering this, a long position is recommended. The entry price should be around $38, a point slightly above the recent lows and below the resistance level. The stop loss can be set at $35.81, the support price, to limit potential downside risk. The target price could be around $42, aligning with the resistance level and offering a reasonable profit margin. This strategy allows for potential gains while mitigating risk through a well-defined stop loss. Given the current price trend and the forecast for Doge-Coin, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight upward trend, but the forecast indicates a period of consolidation before a potential upward move. The support price of $0.04337 provides a strong base for potential buying opportunities. The resistance at $0.04723 indicates that further upward movement might face some resistance. Therefore, a long position is advisable for a medium-term investment strategy. An entry price around $0.045 could be considered, with a stop loss set slightly below the support price at $0.043. The target price could be set around 5 cents, aiming to capture a potential upside move towards the resistance level. This approach allows for a balanced risk-reward profile, taking advantage of the potential for upward movement while mitigating potential losses. Based on the provided data for PENDLE, a short-term bearish investment strategy appears most suitable. The 2-week price history reveals a fluctuating trend with a downward bias, aligning with the forecast that predicts a decline in price over the next week. The support price at $4.341 acts as a potential floor, while the resistance at $5.566 suggests an upper limit to the price's upward movement. Considering these factors, a short position is recommended. An aggressive entry point could be around $5.26, aligning with the recent price action and the forecast's initial decline. A stop-loss order should be placed at $5.43, slightly above the recent high, to limit potential losses if the price unexpectedly surges. The target price could be set at $4.74, aiming to capitalize on the predicted downward movement and aligning with the historical low. This strategy capitalizes on the short-term bearish outlook for PENDLE, aiming to generate profits from the anticipated price decline. Based on the provided information for the sandbox, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend, with recent prices hovering around the support level of $0.5864. The forecast predicts a gradual upward movement, suggesting a potential for growth in the coming weeks. Therefore, I recommend a long position in the sandbox. An ideal entry price would be around $0.595, slightly above the support level, allowing for a buffer against immediate price drops. The stop loss should be set at $0.580 to limit potential losses if the price declines unexpectedly. The target price could be set at $0.680, aligning with the resistance level and providing a reasonable profit margin. This strategy capitalizes on the potential for upward momentum while mitigating risk through a well-defined stop loss and a realistic target price. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. While the historical prices show a slight upward trend, the forecast indicates a slight decline in the coming week. The support price sits at $0.4692, providing a floor for potential price bounces. The resistance level at $0.5921 suggests that significant upward movement might be limited in the near term. Therefore, a short-term long position could be considered, entering the market around $0.510, a price point slightly below the current price and above the support level. A stop-loss order could be placed at $0.470 to protect against potential downward price movements. The target price could be set at $0.550, aiming to capture potential gains as the price approaches the resistance level. This strategy allows for a measured approach to the market, taking advantage of potential upward momentum while mitigating risk with a defined stop-loss. Based on the provided price data for ENG coin, a cautious short-term investment strategy appears to be the most suitable approach. The recent 2-week price history reveals a slight downward trend, with the forecast suggesting further consolidation around the current price levels. While the support price at $0.2107 provides a potential floor for the price, the resistance at $0.3264 indicates a significant hurdle for upward movement in the near term. Therefore, a short position with a conservative entry price of $0.225, slightly above the current price, would be advisable. This allows for some potential price fluctuation before entering the trade. A stop-loss order should be placed at $0.231 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.212, aiming to capitalize on the predicted consolidation and potential slight decline in price. This strategy prioritizes risk management and capital preservation while aiming for modest gains in the short term. Based on the provided price information for Uniswap, a short-term investment strategy appears most suitable. The historical prices demonstrate a recent dip followed by a slight recovery, hovering around $13. The forecast indicates a potential continuation of this sideways trend, with prices expected to remain around $14 for the next week. Given this outlook, a long position might not yield significant returns in the short term. However, a short position could be considered if the price dips below $13, aiming for a target price of $12.50. The stop loss should be set at $13.20 to limit potential losses. This strategy capitalizes on the anticipated sideways movement and aims to profit from a slight decline in price. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $15.28. The forecast suggests Chainlink could remain relatively stable in the coming week, oscillating around $22. This indicates a sideways trend with limited potential for significant price movements in either direction. Therefore, a short position with a conservative approach is advisable. An entry price of $22.50 allows for a slight buffer above the current price and aligns with the forecast. The stop loss should be set at $23 to protect against any unexpected upward price surges. The target price could be set at $21, aiming to capture potential downside momentum before the price reaches the support level. This strategy prioritizes risk management and aims for modest profits within a short time frame. Given the provided price history and forecast for Aave, a cautious medium-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend with recent declines, while the forecast suggests further consolidation in the coming weeks. The support price at $171.82 acts as a potential floor, while the resistance at $352.32 presents a significant barrier to upward movement. Therefore, a long position should be considered with a conservative approach. An entry price around $320 would allow for potential upside if the price rebounds towards the resistance level. A stop loss at $310 would safeguard against further downward movement, while a target price of $340 aims to capture a moderate profit within the medium-term timeframe. This strategy balances risk and reward, capitalizing on the potential for price appreciation while mitigating potential losses. Given the provided price information for EOS, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent fluctuations suggesting potential for further movement. The forecast price indicates a slight upward trajectory, suggesting a potential for EOS to reach or surpass its recent highs. Therefore, an investment strategy focusing on a long position with an entry price around 83 cents, a stop loss at $0.7713, the support price, and a target price of $0.929, the recent high, seems promising. This strategy allows for capitalizing on the potential upward momentum while mitigating risk by setting a stop loss below the recent support level. Holding the position for a medium term, allowing the price to potentially reach the target price, aligns with the forecast and the historical price fluctuations observed. Based on the provided TROM price history and forecast, a short-term investment strategy appears most suitable. The recent price fluctuations suggest volatility, and the forecast indicates a slight downward trend. A short position could capitalize on this potential decline. An entry price of $0.260 could be considered, aligning with the current price and the downward trend suggested by the forecast. A stop loss at $0.266 would protect against unexpected upward price movements. The target price could be set at $0.250, allowing for potential profit if the price drops towards the support level. This strategy leverages the short-term volatility and anticipated downward trend in TRON. Based on the provided information for Suncoin, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a fluctuating trend with recent upward movement, suggesting potential for continued growth. The forecast price indicates a slight upward trajectory over the next week, aligning with this optimistic outlook. Considering the support price at $0.02302 and the resistance price at $0.0266, a strategic entry point would be around $0.0245, slightly below the current price, allowing for a potential entry point during a slight dip. The stop loss should be set at $0.0235 to minimize potential losses in case of a sudden price reversal. The target price could be set at $0.0262, aiming to capture a significant portion of the potential upward movement predicted by the forecast. This medium-term strategy allows for a balance between risk and reward, capitalizing on the bullish momentum while mitigating potential downsides.